Okay, let's unpack this. We've got a prime example of the stock market's baffling logic, where good news isn't just ignored, it actively seems to trigger a sell-off.
It really does. I mean, it flies in the face of the most basic assumption of investing, right? Positive financial news should boost the share price.
Exactly. And for
Yeah.
those of you tracking high-growth tech, this is essential learning. We're diving into the story of Rezolve AI, that's RZLV, an AI software specialist.
And the situation is, well, they released this highly optimistic financial guidance. On paper, it absolutely beat Wall Street expectations.
But instead of soaring, the stock just plummeted. It was this, sharp reversal that wiped out a pretty significant chunk of its market value in just one trading session.
So our mission today is to cut through that noise and really figure out the central question here. What specific market forces, what investor psychology caused this strong financial update to, well, to backfire so badly?
Right. Why did something meant to inspire confidence cause a massive liquidation event? We're going to get beneath the surface to analyze what was actually missing from those numbers.
It's a story about the chasm between, an ambitious forecast and a believable execution plan.
To really get a sense of this, of the scale of investor disbelief, we need to detail the market reaction on that Tuesday. Rezolve AI stock experienced a profound correction.
Yeah, the share price closed down 9.2% in a single day.
And that number is so striking, especially when you look at the immediate backdrop. I mean, this wasn't some sector-wide panic.
No, not at all. The major indexes were essentially flat. The S&P 500 was down, 0.2%? And the NASDAQ composite was down a negligible 0.1%. Just nothing.
That is such a crucial piece of context. A 9.2% decline on a day when the rest of the tech market is basically treading water. It tells you everything.
It tells you the sell-off was purely company-specific.
Yes, investors, en masse, reacted directly and very negatively to Rezolve AI's own press release. It wasn't the market, it was the message.
Right. It signals a genuine widespread rejection of what the company was trying to sell. And this drop, it's not happening in a vacuum. It's just compounding this, sustained investor nervousness.
For sure. If you take the long view, Rezolve AI stock is now sitting roughly 53% below its one-year high.
Oof.
Yeah. So we're talking about a stock that has already been plagued by volatility, and this latest sharp drop just confirms that the market has these deep, unresolved questions about the company's trajectory.
Okay, so let's pivot and look at the actual press release, the supposed good news that triggered all this. What's fascinating here is that it was published before the market even opened. The headlines looked great.
They really did. Let's start with the near-term stuff for those of you focused on immediate visibility. Management issued new full-year guidance for 2025.
And they said they anticipate achieving at least $40 million in revenue.
And crucially, they were careful to note that this target, this 40 million plus, came in well above the standing analyst consensus for the year.
Right, which is a standard material beat. Ordinarily, that alone might send a stock upward by a few percentage points. You'd expect a positive reaction.
But then they unveiled the truly headline-grabbing figure, the 2026 sales target. And this is where the ambition just became, well, almost unbelievable.
They're targeting roughly $350 million in sales for 2026.
Just let that number sink in.
Yeah, the gap is phenomenal. I mean, if we compare that to what Wall Street analysts were actually forecasting for that same period, the average consensus was calling for only $170 million in sales.
So management is essentially telling the market they expect to achieve more than double the current analyst forecast in just 2 years.
It's not a beat, it's a completely different reality they're painting.
It is. If you're hitting 40 million in 2025 and then you jump to 350 million in 2026, you're talking about an 8-fold increase in revenue in a single year. That kind of exponential scaling it's just so rarely achieved.
And to make it even more confusing, they also highlighted some really significant operational wins that, again, should have boosted confidence.
Right, like
Well, 2 crucial things. First, they reached $209 million in annual recurring revenue, or ARR, back in December.
okay, and for those keeping score, ARR is the lifeblood of a software as a service business. That predictable, repeatable revenue stream. So hitting 209 million in ARR shows they have a pretty significant established base.
It shows current demand is strong, for sure. And second, they hit a milestone that's often a major turning point. The company recorded its first profitable month of operations.
That's huge. because it directly addresses that skeptical narrative that these high-growth companies just burn cash forever.
Exactly. And on top of all that, they reiterated their existing goal of generating at least 500 million ARR by the end of this year.
So let's recap. We have a clear 2025 beat, an operational profit milestone, a solid current ARR base, and this promise of absolutely massive 2026 growth.
If you just look at those bullet points, it feels like a slam dunk, which, forces us back to that critical question.
Why did the market look at this massive pile of good news and respond with a 9.2% single-day rejection?
Here's where it gets really interesting.
I think so too. Because the market is signaling that managerial confidence is no substitute for a detailed execution plan. It's not saying the numbers are impossible. It's saying the risk of not hitting them is too high to justify the price.
Yes. The downward move confirms that investors are just overwhelmingly uncertain about Rezolve AI's ability to execute on a scaling plan of this unprecedented magnitude.
It's one thing to declare a $350 million target. It's another thing entirely to prove you have the infrastructure, the sales channels, everything ready to deliver that surge.
Right. So even though they topped the high-level estimates for 2025, it was the lack of detail around that quantum leap to 350 million in 2026 that was the fatal flaw.
The market wanted the blueprint, not just the beautiful architectural drawing.
Exactly. This is the definition of a show-me story, and it's particularly acute in the AI sector right now. The market is just saturated with big promises.
So to leap from an expected 40 million to 350 million, what does that actually mean?
It means they have to acquire new customers and expand existing contracts at a pace that is so far beyond anything they've demonstrated historically. They need clarity on scaling risk.
Okay, so what would that blueprint even look like in this context? What were investors hoping to see that was missing?
They needed to see the how. Are you detailing a major hiring spree for your sales force? Have you announced new strategic partnerships that open up completely new customer verticals? Are there specific, high-margin enterprise-level products coming online?
So the skepticism wasn't really about the 209 million ARR they already have, or even that first profitable month. Those are facts.
Precisely. Those are facts, and they're positive, but they are completely dwarfed by the massive execution risk implied by that $350 million figure. The market essentially said, you've set a target that's 170% above what we think you can do, and you haven't given us any verifiable milestones to make that believable.
And this was perfectly illustrated by that weird trading anomaly that happened. Our sources noted that Rezolve's valuation was actually gaining ground in pre-market trading.
Which suggests, initial excitement, maybe traders just skimming the headlines.
Exactly. But the immediate dramatic pullback occurred moments after the market officially opened. That shift suggests that once the broader market, the institutional money, the analysts had time to really digest the fine print, the skepticism took over.
It was a rational, if harsh, rejection. The market looked at the incredible potential upside and just decided the risk of failure was too high for the price.
So for you tracking this space, this is such a perfect, actionable lesson. If a company provides a forecast that radically deviates from consensus, that variance has to be accompanied by an extraordinary level of transparency.
Absolutely. Or the market just treats the forecast as hype. It will price in the execution risk, and the stock will suffer, no matter how optimistic the headline numbers are.
Okay, so if we connect this all to the bigger picture,
Yeah.
where does this leave Rezolve AI now?
Well, despite this deep slide we've talked about, it's still a substantial company. Even down 53% from its highs, it still has a market cap of approximately $1.2 billion.
Which is still a significant amount of value that the market is attributing to them, even after this sell-off.
And if we look at its current valuation relative to management's own sales target for this year, that $40 million floor, the company is valued at about 3.4 times that projected revenue.
So the market is still pricing in considerable future growth. It hasn't completely written them off.
Not at all. But it shows the success is currently deemed highly, highly risky.
So what do they need to do now? How does a company move from being this skeptical show-me story to a believable one?
I think they need to focus less on sweeping future-dated predictions and more on the here and now, margin improvements, incremental operational milestones.
Don't just tell.
Exactly. They have to consistently hit those quarterly milestones, demonstrate measurable progress toward that 500 million in ARR, and, crucially, offer way more transparency into the mechanics of their scaling process. Show us the pipeline, the customer ads, the leverage.
That 350 million sales target is still the biggest hurdle. But if they can start chipping away at that execution risk, the payoff could be enormous.
Substantial is the right word. Our sources say the shares could have massive upside potential, but only if the business executes on two key areas. First, consistent margin improvements, proving profitability wasn't a fluke.
And second,
And second, actually managing to hit that incredibly challenging $350 million sales target for 2026. The market's current price reflects the high probability that they'll fall short.
the price is basically a discount based on that execution risk.
It is. The market isn't buying management's word anymore. It's waiting for verifiable proof that the scaling is achievable and sustainable.
So what does this all mean for you? The crucial takeaway from this deep dive into Rezolve AI, it's pretty clear. In high-growth, high-volatility sectors like AI, investor confidence is a very scarce commodity.
It is. And just offering highly optimistic guidance, even when it beats consensus, isn't enough anymore. The market demands transparent execution plans, undeniable evidence.
When your targets deviate that wildly from what everyone else expects, the market just assumes extreme risk. To overcome that, you have to replace ambition with clarity.
You have to show not just what you intend to do, but how you are functionally equipped to do it. Otherwise, good news just becomes a warning signal for high risk.
And as Rezolve AI found out, a major beat can just look like an overly optimistic gamble that investors just aren't willing to fund.
And that ultimately is what led to the sharp reversal in RZLV.
Which leaves us with a final provocative thought for you to consider. Given that Rezolve AI has already recorded its first profitable month, and it reached a substantial $209 million in annual recurring revenue, which demonstrates real business traction, does the current valuation, down 53% from its highs, now represent a genuine deep value opportunity for investors who believe the company can actually pull this off? Or does the market's insistent demand for a detailed blueprint mean the operational risks are just too high to justify buying in at any price until that evidence is provided? That's the strategic decision this paradox forces you to confront.